Good afternoon. This is Joe Henches, and it is Sunday, September 8th. And I want to give a little quick market update here for Monday, September 9. Take a look at how the markets closed on Friday and what are we looking at here for the beginning of the week. I'm going to start off with the Nasdaq this time. And if you remember back to the video post I made on the 5th, which is Thursday, I talked about how, will the NASDAQ, can technology pull this thing higher? Can it start to get this turned around? And it kind of looks like we are. I mean, when we look at Friday, we had tremendous volatility. We opened higher, then we went down. I can't remember how far down we were, but we were down pretty significantly there for a while. And then all of a sudden, I think Obama was speaking over in Europe, in Russia at the G20 meeting, and then the market started to rally again. We came back. And so if you look at what the NASDAQ's done here, it is been in like a trading range. The low here is like 35.73. We hit that low. This was a low back on July 24th, and that same low was hit on August 27th. And then the high on August 5th was 36.94. So we're in this sideways consolidation here. And if you look at it on a weekly basis, you can see even clearer that we've gone sideways the last, 5 weeks. And it's, markets can correct simply by going sideways also. Now, here the NASDAQ corrected, pulling back. Here the NASDAQ corrected, going sideways with a slight pullback. Here the NASDAQ corrected by going sideways. So it's very possible that the NASDAQ's going sideways here, getting ready to break out, while the Dow and the S&P 500 have pulled back. Let me go back here to the daily side. So if we get a close above this point here, above 36.94, I think we're off to the races again to the high side. I mean, that would be my guess. I mean, we've got everything lined up still. Like I've mentioned before, we've got the 20 above the 50-day moving average, above the 200-day moving average. The trend line is held. NASDAQ hasn't even come close to coming back to it. The only bearish thing I'm seeing right off the bat is this candlestick formation that it did on Friday is kind of a hanging man type of formation. Now, I pay attention to some of that, but I'll be honest with you, I have made trades based on candlestick formations before and lost money. And so I kind of make note of them and just put it in the back of my mind that, okay, this may be something like that, but it's not something I'm willing to bet on. Okay, so we looked at the NASDAQ. Let's quickly look at the Dow. So you can see the Dow has definitely broken the trend line. I showed this before. It's pulled back. We've basically, again, we've been consolidating the last week and a half. And the S&P 500, as I've mentioned again before, it has hugged this trend line, has not broken down through this trend line, and it has come back up here on Thursday, Friday. We had a nice move on Wednesday, very tight move on Thursday, and it pulled back on Friday. So it looks like it's trying to turn, but it's not turned yet. So we'll see. I mean, we've got a lot of things that are kind of, the market's kind of sitting here watching the Syria situation. The president's going to be talking on Tuesday. So we all know the market hates uncertainty. So that's the kind of thing that's kind of hanging over us. Let's take a quick look at gold. Gold has pulled back the last week after it hit this resistance point I mentioned before. Now we've pulled down, we've still held this trend line. We've got this trend line coming up here. This does look like a bear rally to me. I mean, I'm not getting strong, impulsive moves to the upside like this, like I'd like to see. And let me see if if there's a good example. I don't know. You go all the way back. I don't know. It's totally possible. Now, if this pulls back and goes below this peak right here, then I think gold's in trouble. I think gold could be heading back down to retest the lows if it breaks this prior point. But as long as it's trending high where the lows stay above this trend line stays intact, then we could be up for the turn, and we need to break up through this resistance that we're seeing right up in here and head higher. That's gold. Take a look at oil real quick. And I think the last update I gave on oil, I mentioned that I thought it was, it's in a solid uptrend, thought it was going to push higher. Friday, it gapped up and continued to push higher throughout the day. So you can see on these candlestick charts, if you're familiar with them, when you have a white bar like this, like I'm showing, that means the close was higher than the opening price. And the low for the day is at the very bottom of the bar, and the opening price is the first at the bottom of the white space in here. So we had a gap up and then pushed higher throughout the day and closed higher for the day off the highs, but definitely pushing higher. So we'll see what kind of impact this ends up having on the market. It's a light economic week for the first 3 days of the week, and then we get the unemployment report on Thursday, which is what we typically get every Thursday. I mean the jobless claims, not the unemployment report, the jobless claims. Then Friday, there's a slew of economic retail results and a couple other things coming out. But of course, the main thing everybody's going to be watching is Syria. So that's about it for now. I'm going to look to try to have a post on something related to the stocks, maybe a couple of the stocks I'm highlighting or watching closely. But that's it for now. Good trading, and we'll talk to you tomorrow night.